Good morning, traders. I just wanted to make a quick video about, well, maybe not so quick, but about your strategy and sticking to it and not changing it for, I would say, at least 30 days. If you're, an active day trader, you're taking 3 to 10 or more trades a day, or at least giving it 100 trades before you make any changes, just to see. Otherwise, you really don't know if it works or not. And as you make changes, you can add variables that didn't exist before in the strategy that cause failures and either make you think that the strategy isn't working or, just really messes up your data as far as whether the strategy works or not. And here's an example. My strategy, you can read this section here. I'm going to share the whole thing eventually, but this section here, you can pause the video and read it, talks about the setup that I'm looking for and when to actually buy. So if that's my strategy, here, this stock was the one that I was trading yesterday in the pre-market. And according to my strategy, I have to buy for the break of this level, right? Because it's basically a breakout strategy. And there's pros and cons to that strategy, but I have a very good reason as to why I trade that. And so essentially, the high of this candle is my buy signal, right? Whenever the stock, because this thing's trending up, I'm predicting that there's a good chance it could break out through the high of day, could continue this move. So I would be getting ready to buy at the break of this candle, right? Which happens over here. And the trade would have worked out. It would have been a successful trade. Doesn't always work out, but I'm just saying it would have worked out in this case. And I would have caught a nice little run, at least about probably 10 cents or so. But 2 days ago, I guess I was reading a trading book. And really, at this point, I don't think I should be reading any trading books or listening to other people, because I've been doing this long enough now that I kind of know what works for me. And as soon as you start to tweak that, that's when you end up with problems. And the book is actually a well-renowned book on reading price action. And it was talking about buying and selling. And it basically called out my strategy in the book and said, that it's not necessarily a good place to enter. And I understand why. And there's truth behind what the book says, that, that there's a lot of sellers at the break of the high of day. And that's true. But if a stock can break through the high of day, it signals a bunch of strength in the stock. So that's why I like to buy there, and I'm willing to sell out really quickly. Like if it goes against me by a few cents, I'm selling out, and I can get back into it later. So I understand the risks, and you have to understand as well that a lot of the philosophy that's in place now about trading and entries has the idea in mind that the brokers charge commissions and fees, and Webull doesn't. There's a lot of free brokers out there that new traders are using. So that means that our entries and exits can be a little different, and we don't have to stay in a trade long enough to see if it works, and put ourselves at high risk of a big loss to see if it works. I don't have to buy in at this candle and then, put my stop loss below this candle. I mean, that would be insane. So as soon as I feel like the stock can go against me, I can sell out. Now, here was the problem yesterday, is that because of what I read in that book, I modified my strategy. The book said, a better entry is on the way up to that move, which, again, there is some truth to that. But how do you gauge when you're on the way up to that move? Well, a real common traditional way is for the break, I'm sorry, not the break, but the first 1 minute candle to make a new high, right? And so I started looking for that, happening over here. And it really kind of like flat topped over here. So I would have got in here, and then it would have worked out in this case. But a lot of times you get faked out in that move. Actually, I'm sorry. No, I think I did get faked out here, or at least just looking back, I saw it. The first 1 minute candle to make a new high is this one here. So if you didn't sell, really quickly for that little pop, it would have faked you out, and you would have had to take a loss. and then it does it again. It does it again right here. I should zoom in on this because this is pretty small. So the first fake out, I mean, I guess you could consider that a fake out. It shoots up and then comes back down on these two candles. It didn't follow through, right? We're looking for it to get back up to the high of day. So if it doesn't do that, it's a fake out. Then the next 1 minute candle to make a new high is this candle here, and that's clearly a fake out. It shoots right back down. It doesn't get anywhere near the high of day. And then finally, this candle, so the third one, finally does it and breaks out to the high of day and then shoots higher. So that time it worked, right? I mean, on that third one, it failed twice, that strategy. And my strategy worked the first time, you know. This was another entry for the break of this level, and that also worked, you know, breaking the high of day. So now here's where I got into trouble. So I noticed that, you know, this thing was chopping around like that, and it was failing those 1 minute breakouts, but this one worked. And I have in my head that, you know, I read that book, and the guy, you know, that's you know, much more experienced than me says that, you know, the break of the 1 minute candle, you know, is a better entry than the high of day, like my strategy says. So what do? I'm watching this area, and I'm kind of like debating, you know, should I get in here because it's not part of my strategy, but that's what the guy says to do, and blah, blah, blah. So what ended up happening was I'm hesitating to get in here because I'm struggling between, you know, the tried and true or old fashioned, I guess, and my strategy. And I don't get in. I'm watching this play out, and I'm thinking, oh, I kind of should get in because that's what the old strategies or the, you know, established ways say to do, and I don't get in. And then what ends up happening is this thing starts to shoot up really quickly, and now I'm feeling FOMO, which I wouldn't have felt, but I'm feeling it because I was thinking about that other strategy that says to get in here. I didn't get in, and this thing's shooting up. Now I'm feeling FOMO, and what do? I hit the buy button, and I get filled at the very top at 147. Now my strategy would have said, if I wanted to take an entry here, to wait for the break of this candle, 143, right? And if I would have gotten filled at that 147, I would have sold it out. I would have sold all the shares right back around the break even, the 142, or maybe let it go to 140, and then I would have gotten out. And it wouldn't, at worst case scenario, it would have been a very, very small loss, right? But because I was thinking about, oh, I should have gotten in there, I didn't. This thing popped up. You know, just one thing is piling on to another, one bad decision after another, and usually when that happens in trading, the bad decisions don't stop for a while. And so instead of selling out like I would have if I was trading my strategy, I'm thinking, well, you know, I should have bought in earlier, so now I need to hold. And I need to wait and let this thing do its thing. You know, it's going to go up. On top of that, I averaged down. That's also against my strategy, but because I've already broken my strategy, I think in the back of your mind when you're trading like that and you're just doing kind of random things, that opens up the floodgates to do anything and everything. You know, like all bets are off at that point. So I basically doubled down on my bad trade. And, you know, trying to see if this thing is going to go. And I did that again. I think I averaged down twice, right? Because I was thinking, man, I got in, you know, right at the top. I need to get a lower price. So as this thing started to come down, I averaged down. And, you know, what I should have done was sell immediately. And then it continues to go against me. You know, now I'm setting like stop losses like kind of everybody else does. But those are people that trade on commission brokers, and they charge fees and things like that, and they need to give the stock room to prove itself because they're going to have to pay one way or the other. So since I'm kind of like now trading that strategy, I'm thinking, okay, so I'm going to put my stop loss here, or well, I think I did right there, and then on that day at that time, the VWAP and the 200 or 20 EMA was right around that level. So I was thinking, okay, I'm going to stop out there or when it hits the VWAP. And that's essentially what I did. I stopped around this area and took a big loss because by that point I was in like 30 shares. So for me, that's a big loss because I have a small account. And I mean, it's a good thing I sold out there though, because look what did happen. And this is why you don't hold in hope. I mean, this thing just went down and down and down. Essentially went like 50 cents lower, and it never recovered. It just kept going, throughout the day. So it would have just gotten worse and worse and worse. But let's say I would have held until like market open, hoping that it would come back up and then sell before market open. I would have been out 50 cents per share. And that's $15, for 30 shares there, $15 loss. And my account's about a $300 account. So that's a huge loss, which I didn't take because I sold out at a better time. But I should have never been in that trade. And if I was in that trade doing my strategy, I would have bought it for the break of this candle. And I would have been thinking, okay, so there's my break-even point. And my stop is going to be just a few cents lower because that's what my strategy says to do. It's not a very defined stop like, say the low of the previous candle, but it's a tighter stop than that because I know that as soon as it's somewhat subjective. I sense when the trade is going against me by the way the price action is moving. I'm watching the price action move, and if I see chopping around where my entry point is, and not coming back up to it or not holding it, then I just get out. I don't let it chop more than a few cents. And so anyway, I know I kind of am rambling here a little bit, but the lesson here is once you have defined your strategy, again, my strategy that I've been trading now for, I would say about 3 weeks. It's a culmination really of like 6 months of trading and studying many hours every day and trying different things. And once I established this strategy, the strategy still hasn't failed me. It's given me quite a few green days, and then the red days that I get when I follow the strategy to the T are very small. So I've had a few red days that have been pretty big, but every single one of those red days, it's because I didn't do something that the strategy told me to do, or I did something that wasn't in the strategy. So that's the lesson. Once you do develop a strategy and you really want to give it a fair chance at proving itself, just stick to it for a good month or 100 trades. Don't change anything. Don't listen to anyone else. Okay, everybody trades differently depending on their personality, what broker they're using, whether they're paying fees or not, the types of stocks that they're trading. Like the book that I was reading, I almost guarantee, again, it was kind of a snippet of the book, which that's not a good thing either. That was available on Amazon just in like a preview. I wasn't able to read the whole book. And it just so happened that the preview was like basically talking about my strategy and talking trash about it and what I should be doing instead. And it got in my head. But, that's the danger. So what worked for that guy doesn't necessarily work for me. I'm trading with very different circumstances than what that guy did or what any professional retail trader that's using expensive brokers that they charge fees, commissions, and annual membership fees, things like that. So anyway, that's my spiel, and I hope it helps. I hope it saves some of you guys out there from making the same mistakes that I'm making.